Preqin forecasts that global private capital assets under management will almost double to over 18 trillion US dollars by the end of 2027 from 9 trillion US dollars at the end of 2021. Which asset classes are you most excited about and why? And which one are you most worried about?
The private debt space is relatively new. It did not exist going into the GFC, and we've seen a lot of growth in very tranquil periods of time. And as we're going through some of the challenges around inflation, recession, and the fact that a lot of this lending was done in the middle markets, I think it's a time to make sure that you did the right due diligence with your GP and make sure they have a workout group as part of their staff.
I would say where I see the risk is a little bit more nuanced. And, importantly, while we do think we're headed back into an economic environment similar to the one that prevailed post-financial crisis, I'm not sure interest rates are going all the way back down to the zero bound. And that means we will be dealing with a higher cost of capital, which tends to create winners as well as losers.
I think that in a weaker macro environment, the idiosyncratic risks will stand out more, and the divide between winners and laggers are going to be more marked, so performance will be more dispersed. And therefore, in terms of what I'm worried about, rather than singling out an asset class, I would say that it's the business fundamentals that investors need to pay close attention to understand and assess the performance drivers when selecting assets.
In terms of worries, we're a little bit concerned that investors are a little bit have pulled back a bit from Africa private equity, so middle of Africa. We're still seeing a lot of interest in North Africa and South Africa, but actually we feel that there is still room for private equity in the rest of Africa, and we'd encourage investors to continue to work in that area and continue to select the best GPs in that space.
In many ways, I would say private equity could be worrisome in the sense of just the overall market and just the timing that we've seen here in terms of just the lack of IPOs, the concerns around valuations, transparency. It tends to have the most concerns overall out of all the asset classes, but long term, I still think private equity will provide outsized returns.
I think we've got some challenges in the near term. We talk about this denominator effect. Something to pay attention to is a lot of these allocators are maybe topped up in that space. We saw multiples in some of the buyout space at 20 times EBITDA going into 2022. I think those numbers will be normalizing as well. So it might be a good entry point, and particularly as investors look to maybe lighten their private equity load, I think we're going to see more activity in the secondary markets, and it might be a very good chance for allocators to get better vintage year diversification.